Hey, it's Tanya from Average Joe Finances, and I just had an awesome interview with Mark Miller from Hilton Tax and Wealth Advisors. He gave some amazing insights on ways to save more on your taxes that we're not even realizing, and he helps the top 1% and more save money on taxes. This is the stuff that you want to know that we always hear these stories of all the rich get richer and they don't have to pay taxes. He works on these strategies that help them be able to do this. And the good news is these strategies are available to you, they're available to me, they're available to anyone. And he gives a lot of free resources, and he even is giving his books away for free. So definitely check out this podcast if you're interested in obviously keeping more of the hard-earned money that you make. Stop having to pay so much money in taxes when you don't have to, when there's tax laws and so many regulations around you lowering your tax bracket without having to move to a different state even. Hello. So you're going to love this episode. Make sure you share it after you listen, and share this even while you're listening, share it with people. And we'd love to know what you think about it. So hope you enjoy.
This is Brandon Turner, and you are listening to the Average Joe Finances podcast.
If you're watching this on YouTube, make sure you smash the like and subscribe buttons. If you're listening to our podcast, go leave us a 5-star review. All of our links can be found in the video description or show notes below.
Welcome back to the Average Joe Finances podcast. I'm your host, Tanya Schultz, the Money Life Coach, and today's guest is Mark Miller. He's the CEO of Hilton Tax and Wealth Advisors, and he's basically a business financial consultant. He's been doing this a long time, and today he's going to share his knowledge and expertise with us. So welcome, Mark, to the podcast.
Well, thank you, Tanya. Appreciate being here.
Yeah, awesome. Tell us a little bit about yourself. Start to share your story and give us a little bit of background.
Well, first of all, I've been in the financial consulting and especially the business financial consulting arena for, gosh, it's terrible to say, but almost 40 years now. Crazy, but time goes by. Started off my career with IDS American Express, and then I wrote several nationally published books, and then had a publication company and had a business and financial newsletter that had about 10,000 subscribers across the world. And then launched into my own firm and have been doing my own thing for about 30 years. I've been working with the Hiltons for the last 10 years or so with the Hilton Financial Network. They asked me to become the manager of the Hilton Family Office. If some of your listeners may know what a family office is or not, and we could talk about that in a minute. But we've actually done a spinoff company with my main partner, who is Brad Hilton, who is the grandson of Conrad Hilton. And we've had a passion for kind of bringing some of these more advanced, kind of the wealthiest of the wealthy strategies that the family office uses, and bring that more down to Main Street. So it's available to more average investors. And that's what Hilton Tax and Wealth Advisors is. Which I'm the CEO of that firm. So it's been a long time. I enjoy what I do. I feel like I might die in my chair one day when I'm talking to people. I don't know. I'm not that old right now, but I just love what I do, and I just can't imagine retiring. I probably could have retired a long time ago, but it's too much fun, and just enjoy helping people build their wealth in better ways.
That's really cool. I mean, yeah, I love that fact that it's like, oh, I could retire. I think that's the point of figuring out something in life, right? That you don't feel the need to retire from, like you like it that much and you enjoy it. My first main question, people see the name Hilton, they obviously know that brand or that name. Like, how do you get associated? Like, how does that happen?
Well, really kind of how it happened was as I started to get deeper into my career, I started to work, rather than work on the retail side, like with American Express and some ING and a couple other companies I was working with. I started to make connections on the institutional side of the business, or what we call kind of the smart money side. And in my latest book, Hilton Wealth, I talk about what that means. And as I developed those relationships, I met a few of the Hiltons over that time. They knew that I had a passion for tax mitigation, for advanced tax mitigation, and they're really the best in the world at that. And we did a lot of different things. They made me money, I made them money, and it was in the last several years that we made this relationship. But the Hiltons have their tentacles in tons of different things. It's not just the hotels. And I have people ask me that all the time. How are you going to help me when you work with people with hotels? Yeah, well, that is, first of all, the Hiltons don't even own the Hilton hotels anymore.
Mhm.
Blackstone owns them, has owned them for years. But the Hiltons of 250 family members, and many of them are wealthy in their own right, doing many different things. And really what we do is we connect our clients with the Hilton Financial Network, which is we have tons of proprietary strategies that you really can't get anywhere else. Again, more on the smart money side of the industry as opposed to the retail side. If you were with a broker or Fidelity or something like that, that's kind of the contrast and the difference there.
That's really cool. I mean, I think just the tax side of knowing about your finances is, like you said, one of the most important ways to be able to keep your money and figure out that piece of it. I know is super confusing for people. So, what are some simpler strategies that you might help people figure out?
Well, first of all, what I tell everyone is, and you should know that the biggest expense of your life is taxes. So if we can mitigate those taxes substantially, or even my book talks about zeroing out, getting to the zero tax bracket, then what that does is that massively increases your wealth.
Yeah.
So the first step is to do a formalized tax plan, just like you would do a formalized business or marketing plan for your business if you're a business owner. If you have some kind of formalized financial plan, it's the same thing. You need to have a tax plan because ultimately that will build more wealth for you long term. So we help people put formalized plans together. We have 130 different proprietary strategies, a lot of them proprietary to the Hilton Financial Network, but a lot of them just bulwark strategies that we have done deep dives into the codes, private letter rulings, case law, that everything, of course, is legal, moral, ethical, and stands up to IRS scrutiny.
Yeah.
But we design those and put those into, depending on a client's unique situation, put those into their tax plan, generally help folks save about 50% on their taxes the first year. And
Oh my
then we
gosh.
start working towards getting them to a zero tax bracket over time.
That sounds incredible. Yeah, sounds something a lot all of our listeners probably need to learn more about. What are the first steps? So like the tax plan, like you said, but do people have to have a business to do this, or could it just be like your personal taxes that you're trying to figure out as well?
Yes, at both actually. And we do have some. We want to make sure that folks have they're paying enough in taxes. If you're paying 25,000, 30,000 or more in taxes, generally we're going to be able to help you. I mean, I just worked with a client the other day that we saved 2 million his first year. So it's all over the place, but we want some minimums, obviously, because if you're only paying 5 or 10,000 in taxes, it doesn't make sense to do kind of advanced tax mitigation. But what we'll do, and often people ask, what areas are you talking about here? Well, first of all, it goes beyond what your CPA or your tax preparer, or if you're working in TurboTax. It's deep dive, taking a deep dive into the 180,000 pages of codes, which practically no one has read through all of those. I'll be honest with you. Me and my proactive CPAs haven't read through every single one of those. We know the main ones, but most CPAs will only focus on those basic things, basic compliance. Maybe you're going to take the regular itemized deductions like for your medical expenses, interest expense, things like that. The things that are generally already on your tax returns. We're going to go much deeper than that, especially if you're a business owner. Fringe benefits, deductions. We're going to be looking into going kind of that extra level on home office deductions. There's 3 unique ways where you can take deductions, and we even have a 4th way, a kind of a proprietary way to take and often double your home office deductions.
Oh, wow.
We're going to look into accountable spending plans that are a lot less scrutinized by the IRS than taking individual deductions. If you're a business owner, if you're not a business owner, we have a whole bunch of proprietary tax mitigation strategies that are advanced strategies that are for like W-2, highly comp W-2 folks, where we can dive into those and install those into the plans also.
Yeah. Wow. That's really cool. I mean, one of the things that's been on top of mind for me, I live really close to Nevada right now. One of the main things people do initially is like, okay, I need to move somewhere where it's like more tax advantaged. Is that part of the strategy too, that you might help someone put
Well,
themselves?
you know what's funny about
I
that
don't know
is,
what your thoughts are on that.
yeah. When we work with clients, you don't need to do that. For instance, we have clients in Massachusetts, New York, and all of that have avoided having to move to Florida or Tennessee or something like that, or Nevada, whatever it is, a state that is much more beneficially taxed, because we're helping them save with these tax mitigation strategies anyway.
Wow.
So we worked with a lot of people, especially in New York, that have gone from the 45, 50, 55% bracket
Yeah.
and brought them down initially, maybe down to 20 or 25. And then ultimately, many of them, if they're with us, engage with us long enough, get them to a 0 tax bracket, and they can still live where they want to live. Okay.
Oh my God.
It is
Okay.
not doing anything, again, unethical or immoral. The Hiltons wouldn't be involved, and I wouldn't be involved in anything like that, for sure. That the plans all stand up to IRS scrutiny. All it's doing is just doing a deeper dive, and according to the laws, which, by the way, the courts have said over and over again, and even the Supreme Court, that you are not required to pay any more in taxes than you're legally required to pay.
Right.
Okay. So if we can dive deep into these strategies, and by the way, these strategies are there for your benefit and our benefit. They were made by legislatures that are often there for their benefit. I don't want to go into that too
I
much,
do
but you know
know.
what I'm saying. So there's a reason why there's 180,000 pages of codes, because often it's to help us, not to hurt us on our taxes. And that's what we plug people in. We show them how to design these plans to where they can really save massively. And if we're lucky, and most of the people we work with over time, is to get you to a 0 tax bracket, just like the wealthiest of the wealthiest,
Yeah.
the Bezos of the world, the Elon Musk of the world, the Warren Buffetts of the world. They pay very little, if any, taxes at all.
Yeah, I mean, that's what you hear in the news. And that's like, I feel like the average American or the middle class is like, oh, we're always getting screwed. And they want to complain about the rich get richer and they don't have to pay taxes. But they're actually just utilizing what's already there. They're not generally, like you said, they're not doing something illegal. They know how to
No.
figure this out so
Yeah.
that they can not pay taxes. Because who wants to
Yeah.
pay 55, 60% in taxes like we are in, California and all this other New York, places like that?
Yeah, and it's just and that is ultimately the biggest expense of everyone's lives, is taxes. So let's say that we can't zero out your taxes. If we can cut them in half,
Yeah.
that means that's basically what we call found money. And then our big thing is really, yeah, we're great at tax mitigation. The Hiltons are really the best in the world at it. But more than that, we just want to help use it, and we want to help people get wealthier faster. And this is one of the simple and easy ways to do it, by putting 20, 30, 40, 50, 100,000, $1 million in their pocket that they had no clue was even there. Then it gets you that much closer to realizing that financial freedom, whatever that means to you.
Yeah. That's really amazing. Yeah, just hearing it this way. So how do your fees work, or like how do you figure that out? Is it a percentage of what you're saving for them, or is it a flat rate, or does it depend? How do
And
people?
so we have quarterly fees, and they're very reasonable. I would say our goal is for every $1 to $2, and I say goal, that's pretty much hard and fast in everything we do, is for every $1 to $2 you pay us, we're going to put about $10 into your pocket. So you could
Oh.
say that, yeah, we're going to take a little cut off the top, but we think it's worth it if we're going to be able to put tens of thousands, if not hundreds of thousands into your pocket.
Oh, 100%. That's
And we're very open about that. Everyone's different and their situation is different. And when we get into the phase where we start designing the plan, we talk about those things, present a proposal so we can say to you, we call it your tax saving number, kind of like your sleep number. So what's your tax saving number? We dive deep, get all the details we need to, then come back to you, say, hey, here's your number and here's how things are structured. Now, that's part of what we do. The biggest thing that we do, I just came out with a new book called Hilton Wealth, How to Invest Like an American Dynasty. And the biggest thing we do is kind of plug our folks into all these different things that the Hiltons have done for years and years to make sure they don't backslide on their wealth and get very good, outstanding returns, pay less in fees than you would in a retail portfolio. And so then throughout all of that, and when we design these kind of advanced wealth plans, we have this kind of all through its veins is, hey, everything we do has taxes in mind. So ultimately, we also want to design a wealth plan for our clients to where when it comes time to retire, that they can get tax-free income and design it to get tax-free income. So they're not sitting on giant chunks of tax deferred money that they don't want to touch because they're afraid, and not afraid, but what it does is it boosts them up in their tax brackets.
Oh, yeah. So I can tell you're just like obviously super knowledgeable. You've been doing this a long time, super passionate. Was there something in your past that makes you so motivated and inspired to do this work? Or where did this come from?
First of all, I always had, my father was a banker, and I always had kind of a fascination with money, wanted to learn about money. And I kind of followed my father's footsteps. Unfortunately, he passed away when I was in college, but he was a banker and wanted to get into financial consulting. And somehow I just naturally got into financial consulting and just built my career over time. And I was always just so passionate to where in the 90s, I wrote a couple nationally published books. I even wrote a Complete Idiot's Guide.
Oh, really? That's
And
awesome.
yeah, all kinds of stuff I did, and had a national newsletter on saving money. And it just turned into, like I mentioned earlier, my own firms. And I've always owned a number of companies at every given time. But when you specifically talk about the things I'm doing now, the passion came from gaining knowledge of the insider, kind of the smart money knowledge. And I'll tell you how it came about on the tax side. I was paying, multi-millions in taxes, and it was just getting so frustrating to me. And I had the best CPA in town, which I did have the best CPA in town, but I thought that meant that CPA was going to save me as much as they can. And every year he'd say, oh, I've saved you as much as I can. Basically, we just did some entity planning. And then they said, put more money in your 401k or your IRA, max out your IRA, which you can't really put that much money in those anyway. And it just kept saying that. And I finally got fed up, and he gave me a lecture one day. He was considerably older than me at the time. This was years ago. And he started lecturing me about how I should be happy I make what I make, and I should pay my fair share, and all of this. Yeah, I didn't appreciate that. And I fired him on the spot. He happened to be a good friend of one of my closest friends. So I picked up the phone and I called my buddy right away. And I said, you're going to probably get a phone call from him, because he was not happy. He's like, how dare you fire me, type of thing. I'm great. And some CPAs are like that, by the way. I don't want to dog on CPAs too bad here, because we need them and we love them. They work with us extensively. But sometimes he was just very arrogant, and he was just like, you don't know what you're talking about. You know what you're doing. So I go back to my buddy, who happened to be a mergers and acquisitions guy, but he had done some tax stuff. He had been a CPA also. And he goes, why didn't you tell me you were making so much money? I would have sent you to a tax attorney. Again, I didn't know any better. I go to this tax attorney for just right off the bat, he saves $500,000 the first year. Okay. Paid him
Whoa.
a fortune. We don't charge anything like that. He was like $2,000 an hour or something. It was insane. But he saved me so much money. That gave me a passion and a fire to learn more about it. I worked with him. I started working with some other tax attorneys. So that passion came from there. But I've always had a passion to help my clients build their wealth in unique and special ways. And the Hiltons, the relationships and the partnership that we have with the Hiltons has really ratcheted up our ability to be able to help our clients get wealthier faster and build their wealth in a greater way. So,
Yeah, that's really exciting. I'm all about financial empowerment, specifically for women in that
yes.
sense too. But I think like you're helping to educate and empower everybody as far as building wealth. And this is like such a huge piece of it, like you said. So you don't know what you don't know, right? You don't know
Yeah.
until you know. So I knew
I
for
say
me,
that
it took
all the
me,
time. You took the words out of my mouth.
yeah,
And I say it all the
it took me
time.
well into my 30s and to be like, wait, what am I doing? Like I'm starting to make really good money and
Yeah.
it's all just gone. Not even with taxes, just spending and not having that strategy in place. Do you have resources to help people with that type of thing? Is what like where their money's actually going and trying to minimize maybe let's say debt or certain things. Do you work on that side of it as well?
Not necessarily the debt side and then budgeting. We're more on the investment side.
Mhm.
And what we've done is we've kind of taken some of these advanced strategies, again, brought them back down to Main Street in what we call the Hilton True Wealth portfolios that I talk about in detail in my book, Hilton Wealth. And we kind of have use a bucket concept. And
Okay.
now that's not necessarily used on the wealthiest, the wealthy side, but we brought it a little bit more down to Main Street. So it's a little more understandable
Yeah.
where we have guaranteed buckets. We have buckets that throw off income. We have more market-based equity buckets. And then we have where we really shine is on the private equity and alternative bucket side, where we have a lot of offerings and things that normal investors don't have access to through the Hilton Financial Network. And one of the really neat things about a lot of what we offer is there's assets that back up a lot of our private equity offerings. So maybe we might have the opportunity to make really high returns in the upper teens or above.
Mhm.
But a lot of the issues we work with and worked with the Hiltons and us for so long that they're willing to put up pledge collateral or put liens in or whatever it is. If something does go wrong in the private equity side, rather than us just sitting there and a naked private equity offering,
Yeah.
meaning we could lose as much as we make, okay? We want to make sure that in many cases that we have what we call surety. We can't call that guarantees, but surety to know that if something goes wrong, we're going to at least have our principal protected. And that makes us a little special because there's really practically no one else out there doing that type of thing on the
Wow.
alternative side.
Yeah, those are other things I haven't heard of really or thought about.
Yeah.
Yeah, I'm learning so much. This is really, really cool.
Yeah.
You mentioned everyone's like, oh, I need a CPA. You mentioned some places that CPAs could fall short if they're looking at your taxes. What are some things that are red flags for you or that you think people should be looking out for
With
when,
their CPAs.
yeah.
So here's the thing. I tell you, if your gut tells you that you're paying too much in taxes, you're probably right. Because, and that's strange to say that, but it's true. You think the numbers are the numbers. Well, if your gut says, wow, this doesn't seem, my taxes are going up a year, and we're in a progressive tax system. So the more money you make, the more in taxes that you pay. Okay. So if your gut is telling you, hey, there's something wrong here, you need to investigate that and look at that. Most likely it is, because I would say 95% of the people that we see are overpaying on their taxes, and most 50% or more to start with. And they just don't have any clue about it. And you mentioned before, and I just say that all the time.
You know?
You don't know what you don't know until you know it. Okay. It's not like it's too good to be true or anything. And what the Hiltons and us do is just not possible and it's crazy or something. It's just that you don't know, you haven't had exposure to it yet.
Yeah.
And that's really what our job is. And that's what Brad Hilton, who is the grandson of Conrad Hilton, who is my main partner, that's what we have a passion for. We've got to get the information out there so people know that this is available and know that they can be investing in so much better way, less fees, more safety, higher returns, and know that there are these ways to reduce your taxes that the normal CPAs are really just not plugged into and not using.
Yeah, because they might not be knowledgeable enough as well, like in that capacity as well, right? I feel like, yeah. And the trust your gut instinct.
Yes.
That's what you did, and you called him out, and then he
Yeah.
was trying to manipulate you. That's like, no, that's like a working relationship. Just the same thing if I'm telling people when you should be interviewing your financial planner or advisor. You shouldn't just be like, oh, here's my money. You need to interview, like get to know them. Do they understand you? So many factors. You can't just trust everybody. You know what I mean? Or trust somebody.
Absolutely. Absolutely. And it is about trust. Let's put it that way. Everything in the financial industry is about the trust, about trust. And that's why I love working with the Hilton so much. They have such a great name, and everything they put their name on is you can trust that they're going to follow through, that they're going to under promise and over deliver, which is awesome, which is what we always try to do. But I think one of the biggest things that people don't understand, kind of going back to some of the tax thing, is they think because their CPA is a CPA and they're all smart, okay, that they know everything about money. Most CPAs, and really, I'm going to invite, and I'll get complimentary books out to whoever wants them. I'm going to invite you to read The Tax-Free Business Owner, which even if you're not a business owner, will still apply to you. And then also Hilton Wealth. And we can get those books out to you.
Yeah.
And the reason I say that is because we can only go so far in a short podcast like this.
Yeah.
Because there's a lot of details you need to understand because people don't get what's my CPA. They got to be saving me everything. They tell me they're saving everything. I go into depth in the book why it is they're doing that. There's a paradigm that they've had that's been going on since the 50s or the 60s where they can make plenty of money just by doing a whole bunch of tax returns. They don't want to go to the next level. They don't need to go to the next level. Okay. And most CPAs are not designed to go to the next level. So that's why you get, oh, no, we can't do anything else. Okay. So, but I go over that in my book, and they can go to hiltonwealth.com. You folks can go to hiltonwealth.com. And there should be a pop-up where they can order either one of those books or both of those books.
Yeah.
If it's not, sometimes it does. The technology doesn't work perfect, but it doesn't pop up. Just contact us. Say, hey, I want your books. Send them to me. Give us your address, and then we'll send those books on to you.
Amazing. Yeah. To get that for free, and his expertise and what they're teaching is going to save you. It sounds like a ton of money over the course of your life for sure in taxes. So definitely worth checking out. Let's hear about a success story or a couple success stories that you're proud of, people that you've helped. I know you share some in the book, you said, but what are some that you're like, that changed somebody's life or that you find really inspiring?
Well, I could probably talk. I've had a client in about 2 years came on board to me. They did have a company, a large company. It was a partner, two partners, and they were literally treading water in their business, but their business generated $100 million a year.
Whoa.
So there was stuff going, and they'd been plotting, and both of these, they're making $100 million a year, and each of them are maybe making 300,000, pulling 300,000 a year. So there's something wrong there.
Yeah.
So anyway, so we started diving deep. I will tell you just one tax strategy for the business netted them $18 million in profit.
Oh my God.
So just one strategy that we did for them. And the crazy thing about it was, and I realize that's a big number and that's a big example, but we do the same thing on a smaller scale too. But the crazy thing about it was that the strategy we showed them, their CPAs who were some of the best in the Midwest, when a big firm, probably top 10, 15 firm in the country out of Chicago, flat out told them that they could not do this strategy. and they were wrong. And we showed them how they were wrong. We got them with one of our vendors that was one of the best in the country at doing this particular thing. And it netted them $18 million. So that just gives you a quick example of, again, you don't know what you don't know until you're exposed to the proper people that really understand, especially in their situation. We've done several other things with them too, to how to get a company out of a place where they're just treading water and can start to get into profit in a very short period of time.
Yeah, that's freaking amazing. I think something that came up for me when you were talking about that is this fear, especially in personal finance. Like, if I do something wrong with my taxes, like I'm going to go to jail or the IRS is going to come after me. Because that's a big fear that people have around, like, they're going to get caught doing something or whatever. But what you're saying is, no, you assess all of that ahead of time.
Sure.
Make sure
That's
that's
a
the
myth,
right.
by the way. That's a
That's
myth
what I
that
think too. That's that fear. That's
yeah.
that fear. That's how we're taught and what we see. Because maybe my parents had back taxes for a while. I have clients who do too for whatever reason. But that becomes such a big fear and anxiety for people. Like, oh,
And I'm going to say, and again, I'm really dogging on CPAs today, but again, we need them. We definitely need them. So that is a fear that is perpetuated by the kind of regular CPA industry. Okay, because they don't want you to go outside the lines of what's actually on the forms, because it causes them more work. And in there, many of their minds, liability, and that's not true. If you are following all the codes or private letter rulings or case law or whatever it is, you have all the documentation to be able to take that deduction, then it's not an audit triggering event. The ironic thing is when we do a formalized tax plan, we put an audit reduction component in there. So wherever clients are, generally, we're going to greatly reduce their risk of audit just by having a formalized plan just right out of the gates. Okay, so, but that is a myth that is perpetuated. Don't do anything different. Basically, it's a CPA saying, I don't want to do anything different outside of my coloring lines because this is how I do it and this is how I make my money. And when I go outside those lines, it takes time away from staying inside those lines where I make my money and that's my bread and butter. Okay, that's really what they're saying. Okay. Rather than diving deep into the codes. Yeah, yeah. I mean, I hate to be blunt about it, but that's the reality. And most CPAs are still caught in the 1950s and 60s and have the same practice and are doing the same darn thing.
Yeah.
They're missing so much opportunity too, tell you the truth, because CPAs are highly respected. If they would just make a decision to go outside the lines, they can provide their clients with so much more value.
Yeah. No, I love that. That's the conditioning, like you're saying. Like, so a lot of them just don't know better, don't want to figure it out.
Yeah.
I love that. So let's get into the final round. I know we're going a little bit over here, but I want to get into the final round and I really want your insights on this. So what's one of the biggest mistakes that you've ever made when it came to your finances or business life?
That I've made. Tanya, I've made no mistakes.
Nothing, never.
Nothing. No, I'm kidding. I'll tell you, this is a pretty good story. So when I wrote my books in the 90s, I got on stage in several conferences and things like that. And I actually met one of the greatest commodity traders that really ever lived. Larry Williams, great commodities trader. And he introduced me to his daughter because his daughter wanted to write a book, and I introduced her to Simon and Schuster and so forth and everything. Wow. But the funny thing is, so I kind of befriended them. It was a great relationship, and I get a call one day from his broker. And he said, well, he wants to put you on his friends and family list so you'll see all the commodity trades that he's making on a daily basis, which that's a pretty big deal. I told my wife, I was like, oh my gosh, we're going to be making the same trades. So I remember I gave him or his broker quite a bit of money. I don't know, it was like $10,000 or $20,000 or something at the time. This is when it was a little harder to come by in the early days. And so she started trading alongside, and the next thing I had like $2,000. and the broker was like, well, put a little more in and all of that. And then all of a sudden it just went through the roof, went to 100,000, then back down to 5,000. all of that. The mistake I made was probably not sticking with it, because if I would have just kept the money in, it was such an emotional roller coaster. The mistake I made, he went on kind of one of his biggest tears, and I may have probably had an account of 750,000, a million, or whatever. So you say, knock on wood. I think everybody has those situations in their financial life. I learned as I got older to be a little bit more conservative. I focus now on like the wealthiest of the wealthy that do just keep making sure we don't lose much in our portfolios, if nothing at all, in many of our portfolios, but still have the opportunity to make good, solid, kind of just low volatility returns over time, which puts you ahead of the race. So, but in my early years, I did some of that commodities, options stuff, and learned a lot of lessons early on for sure.
Yeah, and what's interesting is when you said that too, I thought about like Bitcoin, like, oh, if I would have invested in some Bitcoin, like even a couple back in the day, or like buying a house. But I think some of it is luck. There's some stuff that is luck. Like if I would have bought a house 4 years ago, everyone thought that was the highest of the market. And now look, everything's doubled and what's in my area. So it is like timing and luck and certain things you can't time. But I think for the long term, like what you're focused on is like the foundational strategy every year that you need, and for the
Yeah.
long term as well. Because people get caught up in this get rich quick.
And you know what? There's nothing the matter with, and the wealthiest get wealthy via private equity and alternatives, but they don't take all of their money and put it into a private equity offering or alternative offering. Okay. Now, many of them made money from their businesses that technically was private equity, and it grew and it exploded and they have tons of shares and all of that. But you'll see very few of those people that are on the Forbes list drop off the Forbes list. Why? It's because the majority of their money is pretty safe and pretty secure and pretty solid. But they'll only take that 15 or 20 or maybe 30% and invest in things like that. You mentioned cryptocurrency. We're building right now a Hilton blockchain fund that's going to be invested in cryptocurrency. And we're going to have some of the best cryptocurrency traders and ICO people in the entire country that's doing that. And it's going to be probably massive returns,
Wow.
but it's going to be a portion of people's portfolios. It's not going to be, hey, take all your money and put it in the blockchain fund. Okay. So the key, and people will learn that through my book, Hilton Wealth, that the first and foremost is safety and security. That's what
I love that.
wealthiest of the wealthy people think. They're just gambling their money and they're making all of this and they got lucky or whatever. No, it's that safety and security, and then plodding along and getting those good solid returns over time makes them wealthier and wealthier year after year.
Yeah, love that. What is something that you've learned that you wish you knew when you first started out? I'm sure I can guess what that is, the taxes, but yeah.
And I had somebody ask me the other day on a podcast, do you have regrets? And I would probably go back and say in my career, no, because it's part of living. And it's part of it. You have to have some experience, and it takes time to learn those things you didn't know before.
Yeah.
So I would go back and I wouldn't say that I would change a whole lot, because I've learned, even when there were some mistakes made and was kind of backtrack, I learned so much from that. And probably the old cliche, but it is true. You learn more from your mistakes. A really wise person told me once, a person that's worth about $500 million, he told me, not in the Hilton family, but on the outskirts of the Hilton family, he said, things are never as good as they seem, and they're never as bad as they seem. And that's why it's with investing too. Slow and steady wins the race over time, and not the euphoria of making money. And when you're down here in the doldrums, that you, in your life too, I believe you think when things aren't going the greatest, try to stay steady. When they're going great, try to stay steady and keep kind of those emotions under control. And that is phenomenal advice that has helped me in my career, undoubtedly.
So good, because it is so much about mindset and your emotion, like managing your emotions around money.
Yes.
A lot of it. So that's what I help people with too, as a coach too. That's a big piece of the panic.
Yes. Yeah. I mean,
Panic.
And the wealthiest know how to manage that emotion.
Yeah.
That's the big thing, because if you see, and you probably know this, Tanya, but when people go off and they do their own things in the markets, and I've had clients that have done that. I'm going to go take this money over here
Yeah.
and I'm going to go invest it and all that. And I think I'm going to do this trading program or whatever. And then they compare it 2 years later with what we've done for them. And they pull their hair out. They've had all this emotional roller coaster when they didn't have to have that, because as individual investors, if we don't have a solid plan, then emotion's going to take us home.
Mm-hmm.
Again, that euphoria, when we probably shouldn't have the euphoria, and that total despair, when probably we shouldn't have total despair.
I mean,
So,
that's why I always tell people not to buy things when they're super happy and like the extremes of emotions, right? Like
yeah.
having the neutral, like feeling good, but not feeling, yeah. It's like those extremes are when we make decisions if we shouldn't.
Yes. Yeah, when we don't make, when we either are too greedy or we're too afraid,
Yeah.
which, by the way, those are the two emotions when it comes to investing in money.
Mm,
It's greed and it's fear.
yeah.
Okay. There has to be a balance in there. And I just really think that, and that's one of the things Brad Hilton and I have worked on, is with these true wealth portfolios. How can we suck as much emotion out of it as we possibly can? And we call it the teeter totter, where, hey, you could make this much or you could lose this much. How do we minimize that kind of that teeter totter going up and down? How do we make it more go like this and
Mm.
still get our returns, as opposed to the fluctuations, the severe ups and downs on the teeter totter?
I love that that's what part of it too. Do you have any tips or tricks? Like, how do people get started with a plan with you guys or in general with figuring out their tax situation?
Yeah, generally, and again, and a shameless plug here, but I think we're the best, really, and some of the best in the entire country at doing the tax mitigation side of it. And again, I mentioned, if you're paying, say, 20, 25, 30,000 in taxes and in your federal and state taxes, then the best thing to do is come to us. We'll just do a short meeting with you. On the wealth side too, we'll do a short meeting with you, see if you qualify and see how much money that we can save you. Generally, our portfolios are a minimum of 250,000 plus. So if you have 250,000 plus, we can talk to you about some portfolio investing also on the planning side.
That's great. Okay. And do you have any favorite business investing or real estate? Because we talked a lot about real estate in this podcast. Do you have any favorite books or podcasts that you recommend besides your own, which everyone should go definitely check out, obviously?
Oh gosh, I wouldn't say necessarily a podcast or anything. I would just say I've always enjoyed, and I've read every single one of Warren Buffett's books.
Mm.
I really honestly believe that he has it right and has our philosophies right, what we follow in general, and what the wealthiest of the wealthiest and the best investors of all time do. So anything that Warren Buffett has written, I recommend. And even the books that he wrote, like in the 60s and the 70s,
Yeah.
they still apply today. So he's probably the main person that I've followed over time. So that's where I would go first.
Great. Okay. And where can people find more information about you? You mentioned your book, the URL for
Yeah.
your book, but yeah, give some more
Real simple.
social media, all that.
Yeah. Yeah. Real simple. The easiest way, just go to our website, which is hiltonwealth.com. You can also go and find us on LinkedIn, on Facebook. But if you go to hiltonwealth.com, you'll learn more about our company. And you can also just order our books there. And like I said, worst comes to worst, just, hey, contact us and say, hey, I want the books. Send them to me and we'll send them to you complimentary. Okay.
Yay. Oh my gosh, I'm definitely doing that. And I'm probably setting up a call with you like soon to get this tax California situation figured out.
Yeah.
Oh,
Yeah. Yeah.
it's insane. To close things out, do you have any final words of wisdom or thoughts for our listeners that we didn't touch on or something you just want to?
Gosh, we did touch on a lot. I would just say I go back to safety and security again. That's what I learned. I had this idea when I first got in the business, I was going to be a broker, and I thought all these wealthy people, they just take a bunch of risks and they're exposed to the markets. But over time, I realized as I developed those relationships with really the ultra rich,
Yeah.
that's not the case at all. That you'll find that the ultra rich are some of the most conservative people that you'll meet. And they became ultra rich by being conservative where they needed to be conservative, definitely taking some calculated risks.
Yep.
So I would just go back. We always call it sleep at night, being able to sleep at night in your portfolio, how you invest, what you're paying out, what your expenses are, all of that, that you just focus on being conservative and focus on safety and security.
Yeah, I love that. So important. Thank you so much for coming on today, Mark. It's been awesome talking to you. I'm super excited about taxes right now and getting this figured out. Yeah, I think it's
Which is amazing. How can you be excited about taxes?
I
That's
am
great.
now. I'm excited about paying less taxes. Let's just say that.
Yes, there you go.
Yeah, and thank you to our listeners. Thanks so much for joining us today on the Average Joe Finances podcast. And make sure you go and leave us a 5-star review and let us know what you liked about today's episode. And make sure you share it too, because everybody needs this information. So thank you for joining us. Aloha from Hawaii. Mike says goodbye. And from Lake Tahoe and Atlanta, right? Georgia?
Yes, Atlanta, Georgia. Thank you, Tanya.
Have a great rest of your day.
Thank you for making it to the end of this episode. Greatly appreciate you being here with me today on the Average Joe Finances podcast. If you haven't done so yet, make this the episode that you go leave us a 5-star rating or subscribe to our YouTube channel. The Average Joe Finances podcast is for informational and entertainment purposes only. Have an outstanding day.